Hey guys, welcome back to another week of fundamental analysis. So like I said in the previous video, I didn't take a trade this week. Too big of a news. We had JOLTS job openings, we had Fed rates, we had NFP, FOMC. It was just too much going on and I didn't have a clear bias on any of the pairs I wanted to trade. So from the 29th of July to the 4th of August 2024, I didn't trade, which secured my July period as the second straight period of profitability. Now coming into August, the aim of the game is to be profitable one more time, or at least break even if we have a red month, as long as the trades that we taken were legitimate, we can consider increasing the lot size 2 times. So currently I'm risking around 60 AUD per trade. I will be doubling that to 120 AUD, and we'll give that another, let's say, 2 months of data to work with. And yeah, this one time I've kept it 3 months of consistency to really prove to myself. But the next time, if I can get a month or two of consistency on $120, we will increase it again, just because burn the boats. I think we're ready. I think we've got the discipline, we've got the fundamental skills to back it up now. So I think it's ready. I'm ready to lock in and make this year my profitable year. So let's go into the analysis for this week though. COT report. So we had actually quite a big swing in all the currencies. Everything was sort of bearish on most currencies except for the yen. So the yen actually swang 5% bullish into the long position. The AUD, JPY, and the Singapore dollar and JPY are the two currencies I'm tracking just because I'm going to Japan in October, and me and the missus, we did book one hotel with the exchange rate quite high, but now it's just dipped in a matter of week. But it is what it is. You can't predict that, right? We can't predict the market. So um, that's in regards to the currencies. You can see in terms of the indices, they're all increased 2% to the bullish side. However, when we go through the fundamental news this week, you'll see that I'm not even confident in trading this, and the reasons why. Now, oil, gold, silver, which is the commodities oil and gold is the commodities I focus on. No real change, negative 1% for gold, no change in oil. So you can see there's a lot of volume being ejected out of the markets and into bonds, 10-year bonds. Um, so what I gather from this, at least for oil and gold, which is what I trade, is no real indication of a bias change. However, the volume change and out of currencies and commodities into bonds, I think is suggesting a more risk-off approach to the markets right now, and you'll see what I sort of figure out towards the end with the fundamental news, which bias I want to go to. So data, what changed this week? We had Fed, FOMC, Fed rates as well. We had ISM manufacturing. We had NFP and unemployment rate. So going to Fed rates, it was same as expected, as forecasted. FOMC will go into more detail, and it actually provided a lot of input into the sentiment for the Fed, and what it means for oil and gold that I'm going to be trading. Manufacturing lower than expected. We'll go into detail. This is, I think, a continuous, months on months of lower than expected PMI, suggestive of a struggling economy for the US. We have services next week on the 6th of August, so that'll be interesting to see as well. Employment was negative, unemployment rates was negative. I should have job openings. This was negative as well, so should I change it? Yeah, that's going to affect things, so let me just change that job openings one for you guys, so you guys can actually see what I do to change job openings. We had Forex Factory, job openings, where are we? We're on fundamentals. Job openings was 31st of July. This would be yellow. we'll go on our job openings, which was negative. Oh, which was positive actually. Okay, 5th of September. 5th of September. And our job openings was 8.81. Estimated was 8.2, and it got revised up 8.23 million. So that doesn't change my statistics. Sorry guys, I'm a bit sick right now. Paste that here. Okay, put that to the back. Delete that. Alright, so we got job openings as well. Now job openings, you guys can see, is actually positive change. However, when we go through in detail what I read on the different websites, you'll begin to understand why I'm actually net bearish or net dovish on the dollar. So this week, German PPI no change, okay, uneventful. Consumer confidence on USD higher than expected, however did get revised down. So expectations for the future improved slightly, but consumers generally remain negative about business and employment ahead. Although higher than expected, so 99.7 to 103, it actually got revised down from 104 to 97.8 last month, still making it uneventful. There was reports of slow consumer spending plus weak job growth, and therefore pushing the likely rate cuts in September, so which is bullish for gold, bearish for oil and indices. Jolt's jobs openings was still on the same day. Again, we had positive news for Jolt's. However, having a read of this, although higher than expected, does not provide signs of stabilization because of the following. So this was me delving a bit deeper into job openings and the articles involved. They said that hiring has fallen dramatically and continues to slide, falling to levels last seen in March 2020. The ratio of openings to unemployments, so how many job openings there was to the unemployment rate of USD, is still holding steady at pre-pandemic levels, and higher rates dropped to the lowest since March 2020. So although this is net positive in terms of just numbers, having a deeper delve into job openings, you can see it's actually quite bearish in nature. CPI for Aussie, I like to keep eye on just because I'm obviously living in Australia. We have cash rates next week, and it'll be very interesting to see what they do with this CPI data next week. The next couple days. Fed rates and FOMC. So Fed rates no change. However, having a read, the committee does not expect it will be appropriate to reduce the target range until it has gained further confidence that inflation is moving towards its target of 2%. Now, just noting that the previous FOMC had categorized labor market as remaining strong. However, this month they stated that the jobs gain was moderate. So a bit of a slowdown in terms of the jobs labor sort of data. Inflation remains somewhat elevated, which is suggestive of no rate cut. So we've got these two things sort of colliding. We've got inflation still remaining somewhat sticky, but then we have jobs data remaining really poor and showing signs of weakness. So the rates are going to be used to obviously dictate. There's sort of an inverse relation between inflation and employment and jobs and whatnot. So if jobs are poor, we want to stimulate the economy, we want to get people back to work. What we'll do is we'll reduce the cash rate to to allow for more borrowing, allow for more businesses to grow. However, because inflation's sticky, and the cash rates are the only thing that's sort of curbing inflation, that can actually lead to an increase in inflation, which is net negative in the long run. So there is this balancing act, and therefore there's still uncertainty with rates due to inflation and poor labor market sentiment, right? So this is again suggestive of that whole theory of stagflation, where there's sticky inflation but poor economic news, and that really makes me bullish for gold, and I'm actually very, very keen to see how gold, if there's a setup, I'm definitely getting in that. Bank rates for GBP pound remains the same, and the Bank of England states that they have to be careful not to cut rates too much or too quickly. Again, just hesitancy on really affirming if there's going to be a rate cut or not. Now, ISM manufacturing. Fuel. I'm not sure who it is. Should have researched, but Fuel states that U.S. manufacturing activity entered deeper into contraction, which is not good. We want expansion. We want that economy flourishing. Demand was weak again. Output declined. Input stayed generally accommodative. So again, that struggle with the U.S. economy and the likelihood of rate cuts. Now, NFP was very, very eventful. We had poor news on all average hourly earnings, NFP, employment change, and unemployment rate were all negative. We've had revision down as well. Very, very bearish. Okay, and as we go through the US US dollar on the charts, you'll see that it's just very, very bearish on the dollar right now. Everything is weak. The expectancy was 325 BP cuts in regards to the rates, but now it might suggest a 50 BP cut, which again, guys, I don't know in particular detail. This I'm going based off Trader Nick as well, so this is a little bit of intuition from his end, but apparently a 50 BP cut instead of a 25 BP cut is an unhealthy rate cut. It sort of suggests, for me, what I saw that as is uncertainty, and therefore bullishness for gold, bearishness for indices. So what does that mean? Well, let's go a bit deeper. Job openings, you can see it's coming down, but it's starting to stabilize a little bit, which is good, right? Overall good. However, still a downward trajectory in terms of job openings. We want it back up. So the only way it's going to go back up theoretically is if we cut the rates and stimulate the economy. So it would just seem to fizzle until we need to cut rates and get it back up once inflation is curbed. Now, CPI quarter on quarter for the Aussie, you can see inflation was coming down when we had higher cash rates. Now it's starting to, it did climb a little bit. Forecasted was actually lower than forecasted on that quarter, but then it bounced back up. So we're at that 1% for CPI quarter on quarter. Let's see how this goes. It's actually looking good for rate cuts right now, or at least rates remaining the same, no rate hikes for Aussie, which is weakness in the dollar, Aussie dollar. Fed rates, you can see 2-year data still remains at 5.5. ISM manufacturing, the thing I wanted to highlight was just it all being under 50, above 50 being expansion, under 50 being contraction. You can see many months of contraction, and you can actually see lower than expected forecast on 1, 2, 3, 4 forecasting. So very poor manufacturing PMI. NFP is, you can see it's actually revised higher. Revised lower, which is, I should have put it the other way, which is not a good sign. Revision lower means less employment. That's actually wrong. Let me just change that. That is actually wrong. This is revision to the downside, which is bearish for the dollar. Pop that down. Bearish for the dollar. No good. Okay. Unemployment rate going up as well. That trajectory going up. So you can see US dollar wrapping it up is just not doing well. And if the US economy is not doing well, that inflation is still somewhat high. Consumer confidence is low. I'm going bullish gold all the way for sure. And because of less economic activity, I'm going bearish oil. Next week's data, we had cash rates for Aussie. We have ISM services for USD. Take home, very strong bullish bias for gold due to uncertainty with the US economy, potential higher rate cuts due to poor labor conditions, consumer confidence still down, job openings although hotter than expected, but the ratio of openings to unemployment is still holding steady. Slightly bearish data on oil due to poor economic readings, such as manufacturing PMI, as well as jobs. So, I'm trading both now, both oil and gold. I'll be happy to enter both. However, the entries will be slightly different. So let's go on the dollar index first. Let's go on on a daily, you can see after that FOMC dropped around 1.3%, broke this support level, which was actually quite a strong support level. So very bearish on the dollar. Same thing with bonds. Bonds just crashing down, breaking that support there. Now the two things we're trading, let's go on the 4 hour. You can see after FOMC it went down, but it actually held this support here. So this bullish bearish move going down was actually quite strange for me, because theoretically if you had poor US readings, then you might think that would go up, but it held support here. I'm looking for two things. There's two setups I'm either going for. I'm either going for a retracement here and for it to hold and blast up, and I'll pop my stops under here, or I'm looking for it to I'll just get rid of that, or I'm looking for it to pump up here, retest and go back up, and I'll get there on the retest, stop loss under there. So two trades for gold. Again, I'm very bullish gold, so even if, let's say, I did take a trade here and lost, I wouldn't mind taking another trade here, or I wouldn't mind even taking another trade here as well if it goes back down, because I'm very bullish gold. Okay, 2 attempts at this. Second one, oil, less strong with, in regards to less conviction with oil. I've decided not to use this area here just because it is a weaker support turn resistance. I think this is a lot stronger because we've got 1, 2, 3 sort of areas where it's reached. So if it reaches there and shows signs of rejection, or even safer option here, then we can enter for a short trade. So it would be, if I had my brush, if it came up here, went back down, or if it came up here and went back down, right? So it'd be very interesting to see. I'll pop my alert right here for my oil, and for gold I will pop my alert right here, right, for my gold position there. Now let's have a look at US 30. This was the forward trading I was doing, forward testing, sorry. So I had this daily support here. We trailed it to, again, this is not a legit trade, guys, but I'm just sort of forward testing US 30 to see if I might be able to add this one. We trailed up 1.34 and then it came crashing down, so that would have been a nice 1.3% win. Right now you can see it's crashed down here. This is an area turned into resistance, and actually quite a nice resistance area. So what I'm going to do is slap on an alert here. Add alert here. Okay. What I'm going to do is just see if price goes here, it tags in. If it does, potentially take a short position like so. Okay. Again, this is just forward testing just to see if I might be profitable on US 30, because I am bearish on US 30 from a fundamentals point of view. The other two is just for fun. This is really the only 3 that I'm looking at properly. So that's my forecast for the week, guys. I have another month of just strict trading, keeping my lot size proper, seeing if I can be profitable for this month. And then, like I said, if I am, we're gonna increase our lot size 2 times, and hopefully, start trading and making some decent, change, some grocery shopping money on the side or something like that, and then gain more confidence and then double it again and again and again. So tune in for next week, guys. It's going to be very interesting. Thank you.